The rupee continued its decline on Tuesday, settling 42 paise lower at a record closing level of 89 rupees 95 paise against the US dollar. The currency briefly breached the psychological 90 per dollar mark in intraday trade, driven largely by continued short covering by speculators and strong importer demand for the American currency. At the interbank foreign exchange market, the rupee opened at 89.70 but quickly lost ground, ending 47 paise weaker than its previous close. Experts say the pressure on the rupee persists due to sustained foreign fund outflows, a widening trade deficit, and uncertainty surrounding the India-US trade deal.
So we have seen the international geopolitical tension create a negative trend in Indian market, and the main impact is the trade war between US and India. That is also impacting a lots of trade between US. That's why we have seen a sharp correction in USD INR. Also we have seen a sharp selling pressure by the FIIs that will impact a negative on the Indian rupee. We have seen in this year FIIs were in net outflow, that impact on dollar demand, and also it is negative for the Indian rupee.
So there are certain positives also of dollar increasing, but negatives of dollar being higher, they outweigh the positives. So clearly, dollar becoming higher is a cause of concern for us. Now my analysis says that seeing the current geopolitical situation, seeing the current tariff situation, seeing the current way the central banks are acting, and the current global trade situation, I expect dollar to further increase to 92 rupees, and that could be a negative finding.
Market operators believe the Reserve Bank of India is allowing the rupee to find its natural level and has intervened only minimally to arrest its fall. Rising crude oil prices in the international market are also adding pressure on the rupee-dollar exchange rate.
And money has been flowing outside India, being parked in US equities before the expected rate cut on 8th and 9th of December from FOMC. So that becomes an important milestone. Rupee movement could be understood further only after 8th and 9th of December. The second reason is that there is widening trade deficit. And what is the reason for that? So the geopolitical situation and also the tariff barriers that have been imposed are causing a lot of issues on the trade front, and hence there has been a widening.
On the domestic macroeconomic front, India's manufacturing activity eased to a 9-month low in November. Industrial production growth also slowed to a one-year low of 0.4% in October, weighed down by weaker performance in the power, mining and manufacturing sectors. The rupee's continued slide against the dollar poses further challenges for the economy, making imports costlier and widening the trade deficit.